McDonald's CEO is promising more affordability during an earnings call with analysts yesterday. The restaurant giant has faced criticism recently over higher prices at some locations, including an Egg McMuffin costing more than $7, a $16 fish fillet, and a Big Mac combo nearly priced at $18. Higher prices and slumping global sales have sent McDonald's stocks tumbling. To turn things around, McDonald's is expected to offer more discounts on its mobile app, and for now the company is hoping to bring back customers with their popular Shamrock Shakes. They're available now far earlier than in past years. I always thought that was a March thing, but they're thinking that's going to turn it around.
$16.
Can you imagine?
McDonald's sales missed investor expectations in the fourth quarter, hurt in part by the conflict in the Middle East, in which nations had boycotted the brand, Muslim nations, over the perceived stance on the war in Gaza. Growth in other regions weakened as well, and comparable sales were the slowest since the fourth quarter of 2020.
The segment that the Middle East is part of is only 10% of revenue. But, we did see this quarter that was, big enough to drag growth down. Sales for that segment that includes the Middle East only rose 0.7%, and it was a big miss compared to what analysts were expecting. I will say this quarter, actually, the focus was more on the Middle East, the trends in the U.S. and in other international markets. And if you look overall at McDonald's, same-store sales, they actually have decelerated quite a bit over the past few quarters. And the thing is that McDonald's had been benefiting, from outsized growth because of this, over the past few years, in part because of the rebound for COVID. They, raised prices pretty meaningfully to offset inflation. They were also taking share, from full-service restaurants. And so now they're actually saying that their trends are going to normalize a little bit. So that was more of the conversation that we were seeing today on the call. Really interesting. I mean, France is part of a different market segment altogether that mostly comprises developed countries, and the rest of those countries, McDonald's said, did pretty well. So the UK, Germany, Canada, but they did point out France as one of the countries that suffered from these boycotts, and they cited the country's, large Muslim population. That's about what McDonald's said today.
Kempczinski telling analysts that McDonald's needs to get back to focusing on what he called affordability and wooing back the lower income customers that have largely turned their backs on McDonald's as many of the outlets started raising prices. And again, these are decisions often made by franchisees, and sometimes they want to push a little bit to see how much they can get their profits up and running at a time when the economy seems to be in expansion mode. As Kempczinski said to the analysts, we have to acknowledge that it's now cheaper to eat at home than it is at some of our restaurants, and for our business model, that's not something we want.
Yeah, McDonald's got caught in the crossfire here because of course of boycotts pretty early in the war after, some franchisees and the franchisee in Israel posted photos of them, giving meals to the country's army. That really, elicited a pretty swift response from, franchisees in other Muslim countries. But, when this first came out, there were a lot of questions about just how big and significant the impact was going to be, because McDonald's is really, diversified geographically. other companies, including Starbucks, have also pointed to the impact beyond the Middle East. For example, Starbucks said that stores here in the US actually suffered from the boycott.